Ethereum is critical infrastructure for not just crypto, but for real-world asset tokenization. It is going through an enormous internal upheaval. In March of this year, Vitalik Buterin, the co-founder and a very influential voice in the Ethereum community, and other developers published what they call the mandate, which is meant to recenter Ethereum on very important long-term principles, but to reduce the footprint of the Ethereum Foundation and get it out of business development. With me to discuss what's happening with the Ethereum Foundation, the implications for financial institutions, and the outlook for tokenization is Tiena Sekharan, the head of enterprise development for Asia Pacific at the Ethereum Foundation. My name is James DiBiasio, and this is my report. Tiena Sekharan from Ethereum Foundation, welcome to the program.
Thank you, James. I'm really thrilled to be on your podcast.
Well, I'm thrilled to have you. You are the APAC lead for enterprise at Ethereum Foundation. Your background is you were prior to that, one of your roles was at JP Morgan, where you were very involved in JPM Coin and their efforts around tokenized deposits and so on. So you have been in this space talking about tokenization of real world assets in different perspectives. And you come at an exciting time where a lot of these projects are really becoming real and substantial market is building. And at the same time, the place where you work is going through some pretty fundamental changes and questions about the Ethereum Foundation itself and the role of Ethereum in the broader context of tokenization. So I think we will have a very fruitful 30 minutes. So why don't we start with in March, the Ethereum Foundation published what it calls a mandate. I think you can explain that better than I can. So why don't you tell us what that is about?
Uh, I think let's just start a little bit before even the mandate. Uh, the role of the EF is somewhat misunderstood,
Okay.
and I wanted to clarify what the EF actually does. The EF is unlike other foundations to the extent that we don't actually run Ethereum. We are a credible voice, but we are not the only voice. There are many players in the ecosystem who are contributing to its development to the extent that we are very serious about passing the walk-away test that Vitalik talks about quite often. The walk-away test means that if tomorrow everyone at the EF was hit by a bus, Ethereum would still continue to churn out blocks, your assets would still be safe, and all smart contracts will still continue to execute as designed. That is where we want to get to. We are not empire builders. Returns is definitely not our priority. Our priority is, our North Star is self-sovereignty, which brings me to the mandate that you mentioned. In the mandate, we talk very, very deeply about CROPS. CROPS is an acronym. It stands for censorship resistance, openness, privacy, and security. Censorship resistance means self-sovereignty, which means irrespective of who you are, you should be able to execute valid transactions, and no one, no government, no organization, no validator cartel should be able to stop you. Openness means open source. It shouldn't be possible for someone behind the scenes to secretly change the rules, which happens all the time with financial institutions. Privacy, again, let's be very clear, we are not talking about anonymity. We're talking about protection from mass surveillance. That's what we want to get to. And of course, security, which could include protection from hacks, all the way to protecting ourselves against future technology, which would mean something like quantum resistance. So these are the things that we care about very, very deeply. And you might ask, why now? And it's not that this is a new sort of thinking for us. We've always been this way. We've always been ideological. But there definitely is a change to the extent that Bitcoin was born as a reaction to the great financial crisis, as you would know.
Yeah.
And The fear at that time was that we were becoming over reliant on these institutions, and these institutions had so much power and they might abuse that power.
Which they certainly
Today,
did.
sorry,
Which they certainly did.
which they certainly did and will continue to do.
Mhm.
But right now, we are in a situation where we have the same problem, where we are reliant on these institutions, but these institutions are at least regulated and to some extent are accountable. But today, we are also reliant on these completely opaque AI systems, which are run by a handful of organizations that are not accountable at all. So it's almost like we are now relying on this man in the sky to solve all our problems as long as we give up all our self sovereignty and we give up all our agency. And that's incredibly disempowering. That is incredibly dangerous. So, in that context, what decentralization, what censorship resistance can do by using verifiable computation, by using economic incentives, that becomes even more important. Which is why I think this timing, though nothing has really changed, we're definitely being more vocal in what we're trying to do. Sorry, that was a long answer. I try to give shorter answers
No,
now.
no, no, that was good. Thank you for that. There's a lot in there, and we'll unpack some of that, Tina. So one is that, you know, tell me if I'm wrong, but on the surface of things, prima facie, I see a contradiction in you yourself as head of enterprise development, like basically a BD role, if I understand that correctly. Um, and so when the principles of crops that you uh, enumerate there, uh, how well do they sit with whether it's a bank or an asset manager or a tech team that wants to do something that's got a very explicit capitalist, let's make some money kind of aspect to it. Um, and that might mean that they don't want some of those functions that you talked about, or they want those maybe downplayed a little bit, so for the sake of expediency, but also the health of Ethereum as a governance token, as either, I mean, some people think it should be some version of money, or it should be just a way to incentivize people to stay involved in building on Ethereum. So, you've got the need for making money versus the need for the values that you listed in crops. And you are at the middle of that because you're supposed to be, you've got a bit of a sales role. So, explain me how that works and if I'm correct about that tension.
Uh, so you are right that certain conversations can get tricky, uh, but that usually happens when the person that I'm speaking with is short-term oriented. If you are a large bank who is thinking about what the infrastructure will be on which you will put all your assets, if you're putting $1 trillion worth of assets, then you care about the things that I talked about. You care about resilience, you care about safety, you care about longevity. If your business model relies on pumping and dumping meme coins, then you don't. And those are the conversations that tend to get tricky. I won't sugarcoat and say that things are very easy when I'm talking to, say, a 100-year-old organization. That is usually not the case because the person that I'm speaking with might not be long-term oriented.
Right.
That person might care only about his bonus this year or
Mhm.
his next promotion and what he or she can achieve to show progress. In that case, yes, speed becomes important. A lot of other things become important. Uh, we respect what they are going through, but that can't be our priority. We can't be building something that is catered to that individual. We have to build something that your grandchildren and your great grandchildren will still be using, and that's where we focus. It can get tricky, but at the same time, the people that we want to build long term relationships with do understand that the only sustainable infrastructure on which global finance can run has to follow the principles that I mentioned.
There's been some backlash in the crypto community about what's happening. Some people think that that Ethereum has been too beholden to, I guess they call it ideologues, like the Vitalik Buterin, who is not in charge of anything, but he's certainly influential. He's an influential voice as one of the co-founders of the protocol. Um, and he's also one of the key visionaries behind the new mandate. Um, so these tend to boil down to, I think, questions about ETH itself, and both as a token that has some value, But also then the capabilities of Ethereum as a blockchain. So compared to say Solana, it's much more slower and much more expensive, or compared to permissioned DLTs, which are out there and which for certain specific use cases might be preferable to banks, particularly maybe if they're just doing wholesale activity. So with all of these pressures going on, how is the EF thinking about the need for a robust tokenomics, and is crops something that is compatible with also these competitive pressures around the blockchain itself in terms of its speed and its cost?
Uh, I think at this point, I should mention that the views that I expressed shouldn't be assumed as being the views of the EF. They are my personal views.
Okay.
Having said that, since I joined the EF, it's been an interesting journey because it gives you an interesting reputation. Half the world thinks exactly what you said, which is that we are too idealistic, we are non-commercial, we are too inflexible. And then the other half thinks that we've sold our soul. So eventually, we must be doing something right to evoke such strong emotions.
Right.
Uh, what do we think about the token versus what we are building? You, you, no, everyone keeps their savings at, say, Switzerland.
Hmm.
Not because it is the fastest, but it is the most reliable. And we are building infrastructure which is the most reliable. There are many things that we are doing to scale up the blockchain itself. If you're aware of our straw map stands for strawman plus roadmap. It's something that we want to achieve by 2029, where we will have fast finality. We will increase the speed of L1 itself to 10,000 transactions per second, the speed of L2s to 1 million transactions per second. We will bring privacy to the layer one itself, embed it as opposed to having it as an add-on. And we are also trying to have quantum resistance be available by then. So there's a lot that we are doing to solve for the problems that TradFi tells us the issues that they have with us.
Yeah.
Uh, so both things are happening simultaneously. Having said that, we think if we lose adoption for the short term, it's possible to get adoption back by a superior product. But if we give up on our philosophy, then if we cede space there, it's very difficult to get that back. And that's where we are. It is a balancing act. I won't say that it's very easy to do. It is a balancing act, but we've chosen to take on the tougher path, I would like to say.
Yeah.
There are lots of our well-wishers who agree with exactly what you're saying, that maybe we lose ground to certain competitors. We see where they're coming from. But I think there's a sign of confidence where we think that if we build a superior product, we will get adoption anyway. And that's what we want to do.
Yeah.
Okay.
Uh, Tina, there was recently an editorial in the Financial Times by Donald Wilson of DRW, who he didn't name any chains, but he talked about the problems of front running, where validators in proof of stake systems can determine the sequencing of blocks that get transacted. And although this is, when things work well, this is a healthy, normal way that the consensus works. But his concern was that in some cases it leads to front running and manipulation, and what people in the industry called MEV, or maximum extractable value, basically ways for people to get enrich themselves beyond just charging normal fees. So, how does the mandate and crops look at issues such as this, and how are they trying to make sure that Ethereum is a fair marketplace when one for best execution?
Uh, that's a good question, James. MEV has been a problem for a little while, uh, but solutions have already been attempted. So we already have PBS, which is a proposer builder separation. In the next upgrade of Ethereum, which will be called Amsterdam, we're bringing in enshrined PBS, which to some extent solves the problem and also solves the problem of relays being a centralized point of failure. If you combine that with private mempools, it will be possible to save your transactions from being front run. Uh, I wouldn't call myself a very technical person that I can give you the exact
Right.
details of how someone can protect themselves from MEV, but there are solutions that we are looking at, and to some extent, the problem has already been solved as well.
What is the way that within crops, particularly when it comes to censorship resistance and privacy, how do you square that with an institution's natural need and required need for compliance, for KYC functionality, and so on, and the ability sometimes to freeze a trade or something like that if law enforcement requests that? So, is this just a point where there's going to be friction, or is there a different way to envision what those compliance and security functions that banks need works in a crops enabled environment?
Privacy versus transparency, there's always been some friction in these two things because institutions need privacy. If you're BlackRock and you're trimming, say, your Tesla position, you don't want the entire world to know, because then others will front run you before you can close your position.
Mm.
So being able to provide privacy in a manner in a blockchain which is considered completely transparent uh, is something that we need a solution for. Having said that, I think there is a misconception that public blockchains are completely public and that private blockchains are completely private.
Okay.
This really is not the case. In private blockchains, it is possible to have privacy. We have solutions like zero knowledge proofs where you can prove that you are authorized to do something without revealing exactly what you're doing.
Yeah.
There is something called FHE, fully homomorphic encryptions, which bring privacy to blockchain as well, where even when you are doing some computation on some data, that data can be encrypted even while you are doing that computation. So there are lots of things that are happening on the privacy side. Again, I don't want to overstate things. At this point of time, privacy is possible, but it's still not cost efficient. It's still not as seamless as it needs to be. EF is doing a lot of work to build on the space, to be able to provide privacy.
Yeah.
Uh, these are two things that are equally important and opposite.
Yeah.
And it's possible for two things to be equally important and exactly the opposite of each other. We need to find a nuanced solution to this.
Yes. And having come from a bank environment before, I've written a lot about zero knowledge proofs and some of these things, and I think that there's a lot of potential for these technologies to replace a lot of the outdated systems that we have and be actually far more effective at doing these jobs. Um, is the At this stage, is the onus still on, you were talking about, the technological upgrades that EF is working on and others are in the industry. Um, but also, to what extent do you think that traditional banks, but also regulators or police, anyone, lawyers need to kind of change their mindset and be a little more open to what's possible in, in a blockchain-based kind of or cryptographically based techniques?
Absolutely. The whole crypto ecosystem is very alien to them. And it's difficult to imagine what the world can be like if things are on blockchain, if traditional assets are tokenized, if transactions are happening atomically, if transactions are happening peer to peer. It's very difficult to envision what the world would look like when all of these things are there. So I like to give the example of email. Email has like made life so much easier for us. Things are so much better. But imagine if I had invented emails, but if no one had computers, it
Right.
would not be useful. We need that entire ecosystem to be in place for these things to be useful. And it's very difficult to imagine what the world would be like when that ecosystem is in place. I don't I understand that you can't imagine things that aren't already in front of you. Uh, and this world works very differently. If you're a bank, then you want to go to your customers and ask them 1,000 details about them. And then when that customer goes to another bank, they answer the same questions again. When that customer goes and buys a house, they answer the same questions again.
Right.
The person goes and gets a phone, they answer the same questions again. This is really not efficient. if it was possible to have verifiable credentials, through which you could prove that you are authorized to do something without wasting your time, as well as without revealing information which really is personal to you, which can be misused against you, it is a huge upgrade of life.
Right.
And it's not clear because we don't see it in front of us that infrastructure still has to be built to make it possible.
Yeah. But where do you see the opportunity for tokenization, real world asset tokenization projects that meet the needs of the issuers and the intermediaries and the investors? We've got now about 14 to 17 billion dollars worth of value that is tokenized trading that runs on Ethereum rails. It's about 60% of the global market for real world asset tokenization. To grow that substantially we talked about the tech issues, we talked about some of the cultural issues, but also just the product issues. What works and what do you see will be the kinds of assets that or projects that will be viable and provide that kind of expansion?
Right. Uh, now, I come from a school of thought where I think that pretty much any asset can be tokenized as long as, and this is important, as long as you can guarantee the provenance of that asset and you can guarantee the title of that asset. Now, to give you an example of something that doesn't work, in my opinion, I remember the case of Project Mocha. Project Mocha was a case where you tokenized certain coffee trees,
Right.
and those coffee beans were tokenized. And as a token holder, I was entitled to the earnings from the sale of the coffee beans from those coffee trees. Now, on the face of it, it sounds like a great project because you're bringing in financial inclusion, you're taking capital to where it is required. But if you think about it, who is keeping track of how much coffee is produced by that tree? Who's keeping track of what processing happens to that? How much is lost in it? What is the cost of it? At what price it is sold? When you can't follow that entire path, it's impossible to know whether that investor is getting a raw deal or they're getting the actual returns from that coffee shop, from that coffee tree. There's a lot of scope for fraud there.
Right.
So you need to have assets where you can guarantee the provenance, guarantee that if I have an apartment, if I've tokenized an apartment, you need someone to guarantee that I actually have title there. So for any asset that you can do these two things, I think a tokenization works. Having said that, we have to follow a certain path to take tokenization. We can't be tokenizing everything on day one. The first asset to be tokenized was stablecoins. And the reason for that was because in the crypto space, which is notorious for its volatility, we needed something that was stable, where you could park your capital when the market was going haywire.
Cash.
Cash. And then you realize that there are other advantages of having stablecoins as well. It is the perfect asset to be used as collateral in margin trading. You realize that it gives protection to people in countries where the currencies are very weak. It's a protection against inflation for them. And today we've realized, and I don't think anyone expected this even 2 years ago, stablecoins are the perfect currency for AI agents. For them to make payments, it is so much easier to do it with stablecoins on chain as in a wallet as opposed to money in a bank account. So stablecoins was first. But then holders of stablecoins realize that it's kind of unfair that they're not getting any interest on it. So what is as safe as stablecoins, but also gives you interest? Treasuries, money market funds. So
Right.
that's the next step. Soon we realized you can tokenize government bonds, you can tokenize corporate bonds, you can tokenize private credit. In all of these cases, they are fungible, they are abundant, they give you protection. What else has all of these traits? Gold, silver. Gold is very important from the Hong Kong point of view because we aspire to become a bullion hub, a
Yeah.
bullion trading hub.
Yes.
So gold is very interesting as well. But on the provenance point, I think real estate is really interesting to me. So far, when real estate has been tokenized, it's been done in a one-off manner. It's been done by a one-off developer of a one-off project. The time that it'll really take off is when tokenization happens at the source. And the source of all of these properties is in Hong Kong, the Land Registry of Hong Kong, or in Singapore, the Singapore Land Authority, or in Dubai, the Dubai Land Department. That's where the original ownership records are kept. If they start tokenizing, that's when that $400 billion asset class can take off. And tokenization really takes off when everything is tokenized, because otherwise it's a silo. If I only tokenize money market funds, but cash to buy it with is not tokenized, then there's only so much that you can do with it. If you only tokenize private credit, actually a good example is the BlackRock money market funds that they've recently organized. And they recently announced the customers for these money market funds have been named as stablecoin issuers. The reason this is interesting is because now we have stablecoins which are on chain, and the money market funds that will back them will also be on chain. So the ability to track this, the transparency of these holdings improves so much more. So I know your question was about which assets should be tokenized. I think people realize that we need to get to a point where everything needs to be tokenized and put on chain. That's when the maximum efficiency that comes from tokenization will be felt.
Okay. Well, it sounds like you are working hard to do your bit in that evolution. So thank you for joining me on the report today, Tiena. Last question, I guess, is just, it's June of 2026. Over the next 6 to 12 months, any personal milestones or goals?
I hope to reach $1 trillion in assets in terms of tokenized real world assets on public blockchain, on Ethereum.
Okay, well, that's a hard goal. We'll revisit that in a year. We'll see how it went. Thank you so much for joining me today.
Thank you, Jay.